What is a deep market? Deep markets are situations in which a great deal of trading volume can take place without having a significant impact on the price of the securities that are being traded. While the market is undergoing a period where a large number of shares are being bought and sold at a rapid pace, the trading lacks indications that something is soon to occur that would merit drastic increases of decreases in the trading prices. While lively, a deep market is typically considered to be a very stable environment. This does not mean that there is not some small degree of fluctuation in pricing with the deep market. Indeed, there is a good chance that various securities will experience modest changes in price from one trading day to the next. But the slight upswings or downturns in the value of the shares are easily attributed to the usual movement that applies to all markets on a regular basis. The deep market tends to be very predictable, making it easy for investors to identify securities that are likely to rise slightly over the next few days, in which stock options will most likely dip by a point or two during the same period. Generally, a deep market is not seen as a time to attempt to make a huge amount of money unless the investor is able to trade a significant number of shares. Moving huge amounts of shares could result in making a decent return even if the price per share only goes up a small amount. The key to making money in a deep market is to sell off shares that are likely to not change or are projected to dip slightly and buy large amounts of securities that are expected to rise slightly during the same period. While a deep market is not generally conducive to making a large return, it is considered to be somewhat desirable. While the returns for smaller investors are likely to be modest, the chances of losing money are also somewhat reduced. Since the market is less volatile overall, investors stand to lose less if an acquired stock fails to rise slightly in value during the market period. Some consider a deep market an excellent time for newer investors to experiment a little, since the degree of risk is lower for as long as the market condition endures and there is a larger window of time to investigate a stock option before making a purchase.